If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Good morning, everybody. Welcome back to another live stream. Good morning, good afternoon, wherever you are in the world. Thank you for being here. Got a little bit of craziness over the weekend. We've got to talk about some of the stuff going on, tariff escalations potentially back center stage, uncertainties about precious metals in the physical market have been kind of going crazy. I don't know if you guys heard or saw any of this, but I had someone comment on one of my videos that, over the weekend, a lot of the dealers, like the physical precious metals dealers, if you go to the stores in Asia, they were popping off. Like they were just going crazy. There's people lines out the doors to buy or maybe sell also precious metals in Asia. And that I also started looking into a lot of the YouTube channels, the physical precious metals dealer YouTube channels in the United States, and they too had people crowding the stores this weekend. It's a really interesting time in the precious metals world because it does seem that in terms of gold, silver, people are very worried about what's going on. People are worried about national debt levels and the recent surge again, perhaps coming from uncertainties about tariffs. We did see that on Friday. You had a sharp sell-off in gold that was immediately bought by the bulls as you came down to this 45.50 area of support. And then we had the big gap up here this morning. Now, U.S. markets, the U.S. stock market is closed today, though we do still have futures trading here, and we also have Forex open. So markets are still moving. And what they're telling us is that precious metals are just not taking any kind of breaks, it seems like. And I talked about this actually on my my Sunday video. I talked a little bit about what would get precious metals to cool off. And historically speaking, when you have these kinds of moves in precious metals, what gets them to sell off and to correct and have some sort of large scale move in the opposite direction? A really big move back into the US dollar. That is usually what it is, right? It's usually the dollar feels like a sanctuary again. People want to hold U.S. bonds. They trust in the system more. And right now, my personal opinion is I still believe that theme of not trusting, governments, not trusting high national debts, not trusting that they're not going to spend a bunch of money endlessly, is a valid concern that a lot of investors and traders alike are seeing and acting upon. Also, VIX up 19%. I think. Where am I seeing 18? Am I missing something? I don't know why it says 19 here, but it doesn't show in the price. Anyways, volatility is definitely up. The Nasdaq down 1.4%. This one largely due to the tariff uncertainties, right? You can see the big gap down here. And interesting, when I saw this gap lower, my first reaction was, okay, we know this play. We've seen this play over and over, the quote-unquote taco trade of the idea being we see big claims by Trump, and then he walks them back. So far, we haven't seen that, but we've also not seen that dramatic of a move here. In terms of where we closed on Friday, you're talking about a 1.4% move lower in the Nasdaq, so nothing too crazy here. S&P 500's down Futures are down around 1%. So nothing too dramatic. Dow Jones down 0.75%. And the Russell is also down 1.4%. So what we're seeing here is we are seeing an obvious response to, tariff re-escalation. People do not like that, obviously. Tariffs make people nervous. They make investors uncertain about global trade, etc. But yeah. Nick, I looked out for your Sunday video and I couldn't find it, even though I'm subscribed. That's weirdly. I'm not sure why. You can always it should always be the most recent video on Sunday on my channel, but I always post them usually around 7 a.m. Eastern time. What's up, Tiger? Good to see you in the chat, man. Good morning. Another day, another dollar. Yeah, so anyways, DXY, dollar index taking on a little bit of pressure here in response to this. And I put out a bit of a notice inside of our group over the weekend, or at least last night. Let me see if I can put this in here. Pointed out that my Sunday thoughts, super quick. I wrote this, just off a dime. I said dollar, the response to the tariffs, etc. Dollar bearish. This continues to drive de-dollarization theme that took place in 2025. Metals just continue to be bullish, holding on tight to my gold long positions, and stocks a bearish response, which we saw this morning as well. Introduced uncertainty to global trade, especially concerning for international companies. And I also let this little piece in there as well. As we know from past examples, this could all get walked back by the morning. So this is a good question. Are we looking at NAS at support? And so for me, the answer is no. I'm pretty cautious on U.S. stocks at this time, and we'll take a look at them because I do think it is worth keeping an eye on this. Let's take a look at our scorecard. S&P 500. Technicals are still getting a positive score. And I do want to take a look at the technical side for U.S. indices and precious metals. We'll go through a technical dive. But recently, you can see Edgefinder's score for S&P 500 has really gone flat. I'm not nearly as bullish as I was over the last few months. Part of the reason is that we did see institutional selling in the latest filing. Crowd sentiment is still bullish, at least as of the latest options flow on Friday. Technical bias still looks good. I mean, you still have an upward trend. It's hard to dispute that. You have a very strong technical uptrend that, even though we are selling down a little bit here this morning, you've still got a longer term uptrend that's intact. So I probably wouldn't short this market, but I am very cautious on it. You have inflation that's still a bit sticky, right? We had the producer price index number come in higher than expected. The 2-year yields on the rise, that is concerning. And the CPI came in as expected. The jobs market, a little bit more on the weak side. We did get JOLTS job openings, ADP, and non-farm payroll, all kind of missing expectations. Meanwhile, unemployment rate was good, and weekly jobless claims last week were good as well. So generally, I'm getting more bearish signals here on the macro side for the U.S. stock market right now than I am getting bullish. Now, I think that the U.S. stock market, the overall economy is still not necessarily terrible by any means. We have really strong GDP growth, but there are just some concerning factors that I think could make stocks a little less attractive, right? Specifically, the jobs market being soft and inflation still kind of sticky. Again, I just think the better spot for me with indices would be to wait for a pullback. And I'm just not, if I was very bullish on the stock market, then I'd be looking at this and I'd be saying, oh, this is probably where I'm, stepping in and buying the dip. But I'm just going to wait a little bit more cautiously on this. I have other things that I'm just a little bit more bullish on than stocks. So I'm just going to, stay neutral on this one for now. S&P 500, if we take a look at technical structure here on the daily time frame, we are testing the 68.75 level currently, which was a pretty big area. And you do have this gap left unfilled here. If we drop down to the 4-hour time frame, we can see this a little bit better. Take a look at your S&P 500 chart, and you can see we are gapping down here. And this gap is going to be weird because the U.S. stock market is closed today, specifically like the SPY. won't trade here today. So you won't see that gap until Tuesday's trading. So you will have this big gap depending on where we close today on the future side of things. That could be very interesting for markets. So when we take a look at the 4 hour, take a look at the 1 hour time frame. The 1 hour time frame sort of looks like you're almost teetering into more of a downward trend, right? We had this support area that kind of broke, and we actually gapped below, and we did not see the immediate gap fill. So I would say from a technical perspective, short term, you are looking like you have a little bit of potential rollover effect in the S&P 500. Although if we're looking left, you do have some pretty big support here. Looking around that 68.50, 68.25 range, you very well could come down and test that area. I think that if you're a technical bear on the S&P 500, or looking for bearish setups in the S&P 500, I think you'd probably want to wait and see if we can actually break through levels like this. For example, if you get this kind of move, this starts to look a little bit more technically bearish. If you are also looking for kind of the fake rally or a false rally kind of move, this not holding would also be a significant red flag as well. But specifically, I think the big area is if you start breaking through some of these key 4 hour support levels. Now, if you are talking more on the technical side on the daily time frame, where do we start to get a little bit more worried on the daily time frame? I think your pretty obvious spot is going to be this area of support around 68.71. So if we can break and close below that in coming days, like if you get, let's say tomorrow we get follow through, right? If we get this kind of move to the downside, what that could signal to me would be, okay, you may have potential to head back and test like 67.40. If this tariff stuff is going to stick, and that's where I keep saying this, is Trump going to just walk it back today or tomorrow? That's what you want to look for, because if he walks it back, boom, we go right back up. If he does not walk it back, if he doubles down, if he, responds to Europe kind of taking up a strong stance against him negatively, and kind of further escalates things, we very well could see a part 2 to the tariff uncertainties that we saw in 2025. Which, what does that mean? That means lower prices for S&P 500, for NASDAQ, for Bitcoin, for risk assets in general. I'm not calling for that. I'm not short the market. If I really strongly believe that was going to be the case, then I would be shorting the market, but I'm not, right? So I'm not going to try and make a big bet on what I think Trump is going to do next. Instead, there are some charts that I just like better for setups. And from a longer term perspective, I would love to see stocks continue to come down, because then I think we could potentially see some better prices on stocks and indices and ETFs and things like that I would like to buy for the longer term. So I'm open-minded to a bigger drop in the S&P 500. Technicals, I think, from a short-term trader's perspective, these types of levels breaking would be signs that, okay, there's actually some strength here to the sellers. Okay. So I hope that makes sense. I know we just spent a good chunk of time just taking a look at the S&P 500. NASDAQ's pretty much the same story, right? It actually looks weaker in my view, the NASDAQ does, than the S&P 500 for now. If you're a technical bull, right, you're looking for these areas today and tomorrow. You do not want to see, as a bull, these levels start to get broken to the downside, right? That starts to throw up some warning signs where you're like, okay, we're not holding support and we're in a choppy market. A choppy market could very quickly turn sour and see larger scale pullbacks, right? You're not in this type of environment where every little down day was getting aggressively bought. You're in more of a choppy back and forth battleground type market. And that could also very quickly turn into a seller's market. So you have to be careful. I think that in terms of my perspective, I just think that there are better trades out there right now in other places. So with that said, I will show you some of the things that I think are a little bit better of a setup at this time. So specifically, we can see silver is getting a +4 score. So we have lost a little bit of our bullish rating on silver. Though I am very curious on the precious metals. I am trailing a stop loss. Gold is getting a +5. So we are back in bull territory just slightly. You can see here our score for gold is +5. What Edgefinder does, for newer viewers, basically Edgefinder scans a bunch of macroeconomic data, sentiment data like institutional buying and selling, crowd sentiment, and it also tracks a bit of technicals as well, seasonal patterns, market momentum, to build a overview or sort of a speedometer. So you can pull this up, one-stop shop, to get an idea, a snapshot of market forces that are moving gold right now, whether they're bullish or bearish. That's the utility of the tool that we offer. So when I look at gold, a +5 score is bullish, but it is close to neutral. So I would look at this and say, okay, bullish, but cautiously bullish. S&P 500, I'm sorry, when we take a look at gold's price, you'll see I am already long gold. I've been stuck in this trade in a good way. I've just been trailing stop loss on this trade. It has been a really good runner for me. We gapped higher on gold. If we're taking a look at the daily time frame, trend looks very well intact. We have broken to new highs today. Precious metals are in a frenzy buying mode. You have China buying, you have retail buying, you have Costco shoppers buying. Everybody is buying gold. And for some people, that makes people nervous. Some people say, everyone's getting in on the gold trade. Doesn't that mean there's a big, nasty crash right around the corner? And I want to ask you guys, help me out with this. Give me a 1 in the chat if you are bullish gold. Give me a 2 if you are bearish. Okay. So we need to let's see some sentiment here in this specific audience. I'd like to think that we do have a little bit of a more experienced cohort, a more experienced crowd of traders here. A lot of us are interested in macro. A lot of us, this is not day one of trading. A lot of us has been trading for years. So I'm curious, what are we thinking? And all I'm seeing is ones. Ones. So everyone is bullish. Is that a bad thing? Well, a couple of years ago, when I first got into trading, I would say, oh no, everyone is bullish. I need to be a bear. And after doing this for 10 years, I can tell you, sentiment does matter. But if you want to talk about whether there's sustained move to this trend or not, sentiment is not problem number one. Can sentiment drive us to get a little overextended? Absolutely, it can. You do want to be cautious about sentiment getting too extreme. And I do think that there is a bit of worry about gold and silver because people are frenzy buying it. But there's something we need to talk about, and that is the macro. Macro, ultimately, when we go and we take a look at the monthly time frame, we talk about the past historical events that caused gold and silver to have these types of monumental run-ups. When they crashed back lower, when they moved back lower, right? Like gold from its highs had doesn't look like it, but a 45% drop over the course of the next 10 years. You pretty much saw no gains in gold. What caused that? Well, go back further, right? Let's talk about the 1970s and the 1980s. Massive returns. Oh, and then by the way, 30 years, guys, where you basically had no gains. Okay. So gold does this. Gold has these monster rallies and then goes dormant. And it's weird because it's not like stocks. Stocks typically, they do this. They have big crashes, but they kind of grind higher over the long term. Gold can have a ridiculous rally in a 2 or 3 year period or a 10-year period and then go quiet for decades. So it's weird. It's very, very strange. But we have to ask, what caused this? And are we at this point? Right? Because a technical trader for the last 2 years in my comment section will say, this is overextended. It has to come down. A macro trader, which I imagine a lot of you guys are macro traders, will say, it depends what the macro is doing. This thing can keep going. We could have another 3 years. I mean, you're probably going to get technical pullbacks. You're probably going to get, overbought and pull back and then buyer step back. And you're going to get back and forth move. But if you're asking the question, are we about to crash off the cliff? We're not going to crash because technicals are overextended. If that was the case, technicals traders, we got to have a conversation. We've been overextended for years. At what point do technical traders get it right? They don't, right? Macro gets it right. Macro, when the fundamentals actually shift to bearish, then you will get sustained down move in gold. We don't have that right now. What are they? Sustainability in the US dollar, people trusting the Federal Reserve and the US economy and feeling good about buying US bonds. China is selling bonds massively. The globe is de-dollarizing right now. You have such a bullish story for precious metals. Does it make me a little nervous that everyone's in on it and everyone's bullish on precious metals? A little bit, but it's not a reason for me to sell metals. It's not a reason to get short. In my opinion, if you want to talk about when the time comes to sell gold or to short gold, it's when the Federal Reserve starts hiking interest rates dramatically. And I don't think that they can do that very easily. Back in the 1970s, 1980s, the Federal Reserve said, we're going to lose our dollar status, basically, not directly, but that was the idea. We have to save the US. And so they hiked interest rates dramatically. What they did by doing that is they sent us into a really tough economic period. And what that meant is at the cost of a recession, people started trusting the dollar again. The Fed said, we're going to hike interest rates. You're going to get good yield holding dollars in bank accounts. Keep your money in the US dollar. And that caused the US dollar to become a safety trade. And it really killed the case for gold. Are we there right now? I don't think so. So what does that tell me about gold and silver? Bullish. So from a macro big picture standpoint, I remain bullish on precious metals. I don't think that they are done. And if something changes, I will adapt. We talk about it. We call it the scientific method on the channel, or we don't call it, but it is kind of a scientific method approach where new information comes along. All right, we adjust. But right now, precious metals remain bullish in my view. Trailing stop loss, letting a winner run, just keeping on with the trade. And Edgefinder for now is getting a bullish rating on gold, which tells me if we get dips, right, I'm a buyer of those dips until the dip no longer is working. Does that make sense? By the way, if you want to try out the Edgefinder, James, maybe you could grab the Edgefinder trial link for us. If you guys want to try out the Edgefinder, we have a couple options available to people that we're going to be bringing here in the forum that we're going to drop in the live stream chat. If you would like to try out Edgefinder for 30 days, or if you'd like to access our Edgefinder free course, we have a whole free course on how to trade with Edgefinder. You can get that by filling out this trial form right here. So for an Edgefinder trial, if you want to check out our tools, I'm telling you, man, if you are ignoring macro, you're ignoring what's really moving the markets. Technicals are great for entries and exits. But if you're ignoring what is driving price and whether that's going to continue or not, you're missing the story of the market, which ultimately, zoom out, is the big picture stuff that's actually driving the charts we care about. Gold's not going to roll over because it's getting overextended. Gold's going to roll over at some point when the dollar strengthens dramatically or when people start trusting governments more. And I don't see that, at least right now. Guys, get your copy macros, everything. Everything. It is so key. So key. Anyways, let's also take a look at silver, which is up 3.7%. We continue to be seeing a monstrous move on the precious metal side of things, specifically gold and silver, both doing excellent. But silver's been just stealing the show, man. I mean, this thing can hardly get any kind of a pullback. A lot of people thought that this was the technical topping point for silver, only to see this thing after that candle rally 30% again. It's just, the chart looks broken. And I want to just give everybody a homework assignment, by the way. I don't think that the US is in necessarily as dire of a situation as Germany in post-World War I. But go take a look when you get a chance at the German mark, which was the German currency at the time. And it was sort of the currency of the day. The German central bank during around the world wars, obviously Germany, took on the world and they put up a pretty good fight. So at the time they were a superpower, right? They were kind of centric to everything. What I'm telling you, for the reason I'm telling you that, is their currency was strong. Look what happened when kind of
you know what hit the fan. Look what happened to the German mark versus gold. That's your homework assignment. To think that fiat currency, you know, when you're looking at fiat currency versus gold, in human history, there has never been a fiat currency that has survived long term. All of them have gotten devalued, massively against precious metals. And so even though the US dollar is strong and the US economy is centric to the world, it still is not impervious to the forces of history, which is governments overspend, human beings overspend, precious metals typically go up in the long term because they keep printing fiat currency, but they can't print more gold. Doesn't mean it goes up every day, every month, or every year. I just showed you where there's a 30-year period where if you had parked all of your money in gold here, you made nothing. You essentially, after inflation, you lost money dramatically between that period. So I'm not saying it goes up forever, but I'm saying right now, the forces that are pushing this thing up, I'm not seeing a reason to say, oh, that's done. In fact, I see more concerning stuff happening, right? You have one of the biggest ones is in 2011, the Chinese were buying U.S. treasuries. They were kind of bailing out the U.S. by buying U.S. treasuries in mass. Right now, China is selling U.S. treasuries. That puts more upward pressure on inflation in the United States to print money to cover our giant national debt. When other countries, when foreign investors are buying U.S. treasuries, it helps, keep yields under control. If they're not doing that, yields can go out of control, right? The 30-year yield is something we need to talk about. The 20-year yield, the 30-year yield, these things are still elevated. Despite the Federal Reserve cutting interest rates, yields are continuing to go up. This is what we truly, this is what matters for borrowing costs for mortgages. It's what matters for administering to the U.S. national debt, which continues to go higher. So I'm really showing my perma bullness on precious metals right now. Understand, I think that if you are bullish on precious metals, it can still go down. You can still lose a lot of money trying to go long gold and silver at the highs. In fact, I had someone comment the other day, I think it was Friday, or it might have been this candle. It was one day, I just remember somebody was like, Nick, just please tell me this is only a pullback. I'm losing a lot of money long gold right now. And it was on like this or this day. I can't remember if it was Friday. I'm blanking. And I was like, okay, wait. Let's not be silly. That should not be blowing your account. If that's blowing your account, you're way too leveraged, right? Just be careful with it, okay? Please be responsible. I am bullish on precious metals. It doesn't mean I know it's going to go up this week. I am long with a stop loss trailed to cut the loss if this thing completely falls apart. If we get something where the U.S., if something changes, right? If we start seeing some strength in the dollar, if we start to see jobs numbers that are really strong and U.S. economy starts to heat up and inflation cools off, then yeah, gold can come down. But right now, momentum is to the upside, and I'm trading it that way. Hey, Nick, where do you get the put-call ratio data from? I'm trying to set up a small research and scraping data from webs for retail and institutional exposure. I'm looking for open source data. I'd have to look at it, Javid. We have a couple different sources that we use because sometimes different sites, different places, their data will be like delayed. So we have, for most of our data points, we have like more than one that we use. So yeah. Anyways, NASDAQ continues to look red here this morning, down 1.5%. S&P 500 down 1.2%. We will see. Gold up 1.57 here. And I'm not going to do anything further on the gold trade. I'm just going to look for any sort of higher lows to trail stops. 2026 year is a monster year for copper. Yeah, I mean, it depends what you think with the global economy. If you think the global economy is going to stay pretty strong, copper could enter into a super cycle, right? Copper is a very industrial metal. It's in everything. So if you think the global economy, U.S. economy
Chinese economy, if you think that's going to hold up pretty well, copper could be a really strong place. So we'll see. But if you get a recession, copper drops hard. So we'll see. It depends what your thought is on global economic outlook. My thought is I don't think the global economy is like going to fall apart or anything like that. I do think that you could get some equities pullbacks. But right now, I mean, U.S. economy is tracking on really strong GDP growth. Of course, a lot of this is driven by data center stuff. So it's kind of narrowly led, but at least for now, I can't tell you when the top of the AI spend cycle is going to be. So right now, U.S. economic growth is still real strong due to the data center stuff. But we'll see. My concern with indices or with stocks is that they're very expensive, that you have inflation still sticky. Economic growth is kind of mixed. You have good GDP growth on the, well, let's take a look here really quick. Let's look at stocks. Let's look at NASDAQ, for example. NASDAQ's getting a -4 score. That's the lowest score I've seen NASDAQ for a while. Economic growth bias is slightly tilted bullish. So you have services PMIs looking strong. Retail sales numbers came in good. GDP growth looks pretty strong. Again, you also have really good participation in the stock market. So these are some of the bull cases for the stock market. Participation in stocks have been really good recently. Like you've got the average stock doing pretty well. I can show you that really quick. If we go take a look, here's a chart for you guys to add to your watch list. RSP. Take a look at RSP. This is the equal weight S&P 500. So if you took the 500 companies that are in the S&P 500 and you split it up and you put a portfolio together and you split up, let's say you put $1 in all of the 500 stocks, that is what this reflects. Now, how is that different than the S&P 500? Well, if you're looking at SPX, SPY, etc., what this does is it allocates more money to the biggest companies. And what you see here, what's kind of interesting is that the average stock, you have really good breadth in the market, meaning participation across the different companies, the different sectors, industries are strong. That is emblematic of what is good economic growth. In fact, I still think, I'm long the Russell specifically, which is, taking a hit today alongside most indices due to the tariff news. But I still really like the idea of a broader or more participation-based rally, not just tech stocks. I think that that's a decent. So based on the copper idea, kind of similar. If you think international growth and trade, et cetera, could still do well in 2026, copper, the broadening trade, meaning maybe looking at the Russell, looking at something like RSP, looking at the Dow Jones, looking at dividend companies instead of just XLK, right? The technology sector or semiconductors, which have done really well recently. If you're looking at a more broad-based participation rally, then we would potentially want to be less favorable towards NASDAQ and more favorable towards, the equal weight S&P 500. You have so many options within markets. You can build a portfolio based on what you think is most likely. For me personally, look, I've been long tech stocks, and I do still have a couple Mag 7 companies that I really like in my portfolio for the long term, Meta and Amazon, et cetera. So anyways, I'm out of time here, guys. I mentioned this earlier. If you guys want to try out the Edge Finder, we are offering trials at this time to the product. If you've been watching for a while and you're like, yeah, I want to explore it, here's a couple things that you get for free. You get access to our Edge Finder free course. So we have a course on how we use economic data to find better trade setups. That's yours for free if you fill out this form and request a trial. So take that link that's just been dropped in the live stream chat, and then you can fill that out. It'll send you the course. And then you can also find out information on how you can try out the product for 30 days and see if it's the right fit for you. We have macroeconomic data in here, sentiment data, like, of course, institutional tracking tools, like our commitment of traders data, and so much more. So if you want to try it, there is the link. Up next, we have Ivan, who is going to be, of course, taking a look at some setups that he's watching in this market right now. He is a Forex guy especially, so stay tuned. You won't want to miss this. We'll be right back with Ivan just after this break.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
And I took a little trade this morning, Nick. It was about 62.20. Was the middle of my night. So sorry for just saying, hey, I bought it. But yeah, it was a middle of the night thing. But posted the trade some hours ago. So yeah, I mean, we can discuss that left, right, and absolute center. But let's see where it is. Here it is. Your new high, number one trade, 50 pips, 50% chance of winning. Reason escalation of the trade and trades between Europe and America. It seemed pretty hot like yesterday or last night, where Europe is coming out with joint statements and saying that they're going to retaliate, or that they're not going to have anything of it, and for that matter, fact that Trump wants the peace prize. At least when he responded to Norway. So that's pretty funny. I think it's pretty funny, but hasn't really had the effect that I really want on that trade so far. On the flip hand of everything, euro yen has really had a move higher, and then dollar yen, yeah, not really. So the question of the questions is number one, number two, number three, and number four. Is that number one? Is that a number one reversal trade? And number two, is that a number two reversal trade? According to my rules and regulations. And the easiest technical answer is yes. But there is a bit of, I haven't really seen that quite at the moment, but there is some issues with the yen going forward. And it is that the Japanese Prime Minister Takashi is ready to take necessary actions to get Forex moves, and that there might be a call for a snap election. And she's supposed to be talking in, I don't know when she was supposed to be talking, but and the likely date for that snap election is about 8th or 15th of February, which is oh shit, there's an update. She will call for elections 8th of February. Now that's 3 weeks from now. Now the problem here is definitely political, but number two is, what do you do when a prime minister almost single-handedly has been the reason for why we have risen ever since, where was it? Ever since October. So the whole is rally from 157 all, so 147 to 157 to about 1,000 pips. She hasn't necessarily been the only reason, but a lot of that move was because she became prime minister to be, and then prime minister. Now, that if she loses that election in about 3 weeks or so, that's gonna send Japanese yen into a turmoil. My little prediction. Second of all, I also believe that we're going to go back down to 148, 147 if that is true. Now, isn't that the strength that the Japanese Minister of Finance Bank Japan ones, probably. So then the question then becomes, who is leading on the polls? That's going to be the driver, presumably at least, going forward. And I don't know, I haven't seen a poll, but I need to look for it, and that's is more than likely going to take the forefront of the direction of yen. So we are maybe sidelining fundamentals. We might be the daily has a hiccup. Yeah, I would agree. So we might go away from fundamentals, we might go away from sentimentals, and we might go away from what else is there? Sentiment. So, and it might even lead back to technicals. I remember I got a question last week. What did I think about a short on dollar yen? And I said, hey, technically, it is in a good position. It looks about all right. I don't know why it's still green, but hey, it is what it is. It's supposed to be, and yes, it is my number 2 trade setup for that matter. But there is a lot of uncertainty. So, how do you then trade with uncertainty? You trade like normal. And but who says M9Z Zor says dollar yen to 160. Absolutely. I agree. Fantastic. Good news. You are one of the experts. I 100% believe that we're going to go to 160. I just don't know if we're going to do 160 then 147, or if we are going to do 160 down to 157, and then when she does win the snap election, to really firm down the power in Japan. This is thing that's going to take off like a balloon. So that's going to be a very fun thing to watch. But again, we're going to have interventions. So we might go up to 160, 161, 162, and then snap back again, and then back up again. And that's going to be a lot of fun. So I think it's going to be a lot of fun going forward. I just don't know. I just don't have conviction in this very moment to trade dollar yen, but it would be a fantastic trade if I was convicted. So my euro dollar is what, 16 pips in profit. Sorry, I need to, yeah, this one. About 16 pips in profit, but it is what it is. I mean, what's your thoughts on the flower seeds futures, bullish or bearish? Sunflower seeds? There's no sun here, sir. It ain't got no sun. I'm just gonna double check that. Sun. Is there a chart for it? Just gonna buy it. But yeah, I haven't been tracking it. But yeah. But actually a bullish at the moment. CPI a bit bearish for the euro, and might be why it's more stable to them than pushing. I don't know about that. Yeah, it's better to talk there. I can see what you're saying, Max. Yeah. By the way, Max, are you still in a euro short? Just need to sneeze. Sorry. Sorry. Okay. Still need to sneeze, but okay. 2.3. I think 2.3 is actually bullish for euro because it's stable. When aren't falling. We've been 2.3 for quite a while now. So the Eurostat came out and said again we have about 2.3 inflation. So I think that's pretty okay for Europe. Meaning like it doesn't fall, therefore it's good kind of situation. Yeah. So by the way, yes, we have that again this week. Maybe I should buy pound dollar tomorrow then. Cause Maxi, I love you, Maxi. But Maxi has shorted euro dollar at 117, which is my target. So I can see a stop loss is 116.70. But yeah. I'm not gonna say that we have a reversal and you should look out. But I'm looking forward to the volatility tomorrow. And I don't know what the score is right now between us, but when I jump in on a trade, it generally has kicked you. Okay, I'll look at it. I'll look at it. Sunflower. Is there a ticker for it? Seed futures. Is it this one? NIPR. Pound is not collapsing. You're late. It's only up this year. No, haven't really thought about it, to be honest with you. We need a DXY pull at this point. Yeah, because I'm bearish dollar for a day or two. Come on, man. Don't do these to me. Okay, can I tell you guys my dream about dollar or what I want to see on dollar? Buy. No, why am I having a red here now? Sorry. That's a buy. That's a buy. That's a sell. And that's a sell. Not financial advice whatsoever. But cool. So I really want us to go a bit further higher, but then it got hijacked. So my theory is that week number 1 and number 2 should be bullish dollar, and I think we have been quite a while, quite good now. Week 3 should be a pullback and where we are right now, and then week 4 should be a rise again. So for me, this is absolutely Euro has a natural 0 score or eco score 0. Yeah. Okay, so there is different ways to roam here, Maxi, on the Euro. And the way I do it is in terms of interest rates and inflation and all that thing is number one, are we rising? Are we rising or are we falling? Are we moving at all? And it's quite flat as a pancake, right? So to me, that's good to go bullish. Now, that doesn't mean that euro doesn't fall, and it has fallen. And I very much agree with you I really much do agree with your bearish sentiment. I just flipped for this week because not flipped, but short-term pullback situation because of the trade tension. So it's not really that it ain't that deep, bruv. Right? So I want the dollar to come to 100, at least back here. Around here, I wanted us to go to 100 and then down, I don't know. Well, would you say 95 to say? So do we say 95? We can say 95. Who have you told dollar should go to 70? Price setup. My friend took a loss on euro dollar sells. I'm waiting for pullback to net. What does that mean? But okay, I'll continue. So number one, number two, number three, and number four. Aussie is going higher. I was imagining to buy it earlier. Where is it? Earlier this year, or not earlier this year, but earlier. We're just in a range. Now I look, and I don't look. It looks like it's a great trade right now. Yesterday I didn't feel that way. I actually thought it would break, then go higher again because I really want us to retest this level again. But regardless of that, to me, Aussie is bullish for 2026 so far, where we are likely to start hiking, which is turning around completely, hiking this year, given the current inflation situation in Australia, where you also still have very tight labor market. So that is, of course, bullish for the Australian dollar. I think we just need to get through this dollar bullish situation. Now this week is going to be bearish for dollar, and then that pops it up. So maybe, I don't like ranges, but maybe this one will turn higher. That would be great. New Zealand, same situation, same range. I tried to look for sells on this one last week, and I didn't necessarily flip on it, but didn't really come true and didn't really do what I wanted to do. So we can do a bit of waiting time. I'm just going to double check that I'm not losing out on news. Or dollar just moving whatever it does want to do. IMF says it's too early to gauge the impact of the latest trade tension. Yeah. France plans to use 49.3 constitutional power to pass budget. Fair enough. Dutch finance minister says threats, type threats from the US are responsible. Google says Germany sees skyrocketing business sales. Okay, fair enough. So can't be that hard. So for that matter, dollar Swiss having a field day lower. I'm not on that train. Dollar CAD on that train. Now the question that becomes, will now dollar yen also join this dollar weakness trend? And if that is true, will Bank of Japan intervene when dollar is weak? And a very liquid market because markets are online today. Cycling Club 55 says, like the dollar index prediction. Thank you very much. Boom. So, S&P 500. My good old friend. Or NASDAQ, sorry. My good old friend. When I call out the bottom is here. I won't call out the bottom today. Maybe come back next Monday. The very simple reason is that this is what features. So I think that we are going to go lower before it goes higher. I mean, we could go higher by all that means and whatever. Sorry, let me say differently. If Trump comes out, or any of the European comes out and says that, oh, we're going to pull back, or we're going to retrieve, or we're going to reduce whatever we're going to do, then yeah, sure, this one can turn higher again. If whatever that was posted over the weekend is no longer valid for the market because it's being retrieved, taken back, put into a box. And when that hasn't happened, then I think we're gonna still stay depressed. It's just 1% or 1.5%. So we haven't really fallen that much. Now, the question that you might ask yourself, and I'm asking myself, is this a buy opportunity? For me personally, I wouldn't say so. I wouldn't say so myself. Now, I'm always conservative on Nasdaq. I'm always conservative on S&P 500. So, but if we start to climb again, I'll be interested. No, I wasn't well beyond 95, sir. I was down to 96 or something. But if we take a bit of a downturn, 97 seems to be okay level. Down to that level, whatever that is, 96.7. So it's towards that direction, after all. Yeah. That's okay. I know. So, silver. I said yesterday I want to pull back. Also want it to go to 100 this week. No, it's all right. It's all right. You are forgiven. Still love you. But okay. So silver goes higher. If I'm supposed to be interested in it, I would. Is there echo? And if I'm supposed to get into it, I need to pull back, and a new higher high, new highest high of the day, of the year, isn't conclusive of that situation. Same thing for gold. Made a brand new higher high yesterday or this morning, depending on where you are in the world. Okay, cool, great. I have acknowledged that they are there. It is just not for me at the moment. Somebody said earlier, I'm in oil. Buy. And my simple answer is, what makes you go into all buy? Not necessarily to make you look, not necessarily to be pointing bad pictures of you, but I don't see the trend. And I'm thinking about the action that it might lead to, and then I would also say that I would only go. I wouldn't only, but I would go long oil when into U.S. inflation is rising, and we have cuts of oil production and increase of oil rig counts, or at least the attempt to make higher oil rig. Sorry, opposite, to see that the rig count is falling, so that production goes lower and we have lower supply, meaning increasing price. So we're currently just at 59. I don't see that this is technically a good position to be in, but I mean, at the end of the day, we are driven by supply and demand more than anything else. Cool. So I really want to be in a yen pair move. I'm not. New Zealand seems to be picking up steam. So for tomorrow, like there's always tomorrow, London Open, I really love London Open. I'm looking into maybe adding to pound dollar, maybe adding to a New Zealand short. Sorry, you say New Zealand short. Dollar Swiss short. And then I need to figure out these yen pairs because I really need to assess the risk of the snap election or just interventions. But at the end of the day, this dollar weakness only makes dollar yen go lower. And that is also, for me, an even better buying opportunity at the end of the day. Because I believe yen, after all, in the current situation, would weaken. But now that becomes down to who is going to win the election. So, for me, I am. I generally okay. So for me, what I normally do, as you can see, it says like mentor somewhere here. So I do give away. I do have a one-to-one with you guys in Discord. So and which is absolutely a fantastic hour. So I normally do. Why can't my brain do two things at the same time? Hi, I really love to help you guys. If you are struggling with your trading, please get in contact with the support team to get the link to my calendar. There is, when you book that meeting, it's free. So pick a time. It's in your local. It's in your local. It's in your. It shows up in your local time, so that I can get to work with you at least for an hour to see where in your trading I can be of service, because I really love that. I really love to be of service to you guys because I never had that. So I'm kind of giving something that I never had so that you can become better. You can become, hopefully, a much better trader than I ever would ever be. So if you're interested in that, please make contact with the support team to get the link to that calendar so that we can work together. But yeah, so that means that my time is up. I love you very much, family. We are currently in profit for 2026. So until next time, boom. See you.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So just to remind you, I'm doing a DNA funded account giveaway. It's gonna be a, let me see, it's gonna be a 10K one phase account, and I'll do the giveaway somewhere in the middle of my segment. So in 10 to 15 minutes. Now, time for analysis. So time for the charts. What has been happening? Well, the breaking news, the most important news is Denmark, Norway, Sweden, France, Germany, UK, Netherlands, Finland, 10% tariff. So tariffs are back. The markets had a reaction. I'm sure Nick already went through this, but it's so important that I need to repeat it. So the reaction right now is S&P down, NAS is down, pretty much all of the indices are down, while the DXY is also down. Usually the effect, or the effect that we have learned, is when there are tariffs, the dollar loses value. Now, this is a tricky scenario because alongside of the tariffs, you actually have Trump wanting to possibly invade Greenland, possibly put boots on the ground in Greenland, which creates a risk-off environment, which is bullish for the US dollar. So it's tough. It's tough to get a clear reading on the USD. What is pretty easy to do is have a clear reading on gold, have a clear reading on silver as well. So gold and silver, precious metals, great risk-off assets, gold especially. Silver at this price, I think, is overbought. It looks a bit too crazy. But gold does look pretty high probability. Gold looks pretty good. So those are the effects. Risk off is continuing. Now what everyone is wondering, will there be a taco trade? So will we get a taco trade? Trump always chickens out. How can you execute such a position? Well, you could essentially do it on the S&P. You could buy these lows on the S&P, or you could buy this low on the NAS, or you could buy this low on the dollar. You can't really catch gold or silver because I think even if Trump changes his mind, I think gold at least will just continue flying higher because we still have quite a lot of uncertainty. Bitcoin is down, Ethereum is down. Interesting to see that. So as far as the taco trade goes, I'm not 100% certain. Maybe you could play the taco trade by selling GBP/USD because the pound is pretty weak. Again, the dollar, this event could be a mean reversion event. So we are getting a bit of a bullish move, but it may be quickly sold off. Now, I don't really see a massive opportunity for profit here. I don't really believe this is a massive move. Looks like the markets have learned about the taco trade. Looks like the markets have learned to possibly ignore Trump. That may be happening. So I'm pretty hesitant to take on a position. Because, again, these moves are just not massive. Maybe the one on the S&P and the NAS is massive or big, especially in the S&P, gap down. But I don't really want to buy the lows here. I was looking for the NASDAQ, and I was actually hoping to see a break higher from this triangle. So we have a triangle right there. And unfortunately, we have broken lower out of the triangle. That's not really a great scenario. That's not really what you want to see if you're a bull. And I'm definitely a bull on the stock market. So this is not really a level that I want to buy. I was looking for all-time highs. I was looking for a breakout higher, possibly even a break of, again, the all-time high. That didn't happen. Instead, we broke lower. I know that there's a very high chance that Trump walks back on his word. Looking at his historical performance and looking at his historical tariff scares, he walked back on every single one of them. So that is what the probabilities tell us. But looking at the markets, looks like the markets have learned to ignore Trump, at least a little bit, because this move is definitely not a big one, especially not on the DXY. I mean, you would expect a candle such as this one from the 1st of August. A big candle. This current daily candle, it's not that massive. It's not that big. As far as my game plan goes for the markets, so let's go through the watch list. On the watch list, they have UJ, Pound Aussie, and Gold. UJ, I don't think we're going to get an intervention. So I have a sell limit in the markets. I'm pretty sure I'm going to remove it. Looks like an intervention is not going to really happen. UJ is coming down lower, so it's not really getting the explosive price action higher that I was anticipating, and I don't really think that this is a smart play at the moment. Again, I may revisit this idea in the future, but for now, I'm probably gonna remove my order. Again, if you're in the A1 Trading Discord, you're gonna get an update about this. So if you want to join the A1 Trading Discord, get all of my trade signals, you can do so by clicking the link in the description and using the code Marco to get 25% off on your subscription. So check it out. And again, if you're in the Discord, you're going to get an update about this position. Most likely, I'm not going to keep on that sell limit. So I'll remove it. Maybe I'll revisit the situation in the future. Looking at the Forex Factory calendar, we actually have a BOJ meeting on Friday, January 23rd. It's tentative, meaning that we don't know the time. And that's the tricky part with the BOJ. It's the only central bank that doesn't give you the time of the meeting. That's what makes it tough. So it's going to be like a span of a few hours. There's a few hour window. I think it's usually at around 6 or 7 a.m. my time, which is London time. But you never know. You never know with the BOJ. So they are planning to keep the rate the same. Intervention most likely not going to happen because UJ is falling. Again, the dollar is losing some value. So that's the story with USD JPY. Most likely going to remove it from the watch list. Pound Aussie. Pound Aussie, thankfully, is continuing lower. So I like it. I just need to see a convincing break of the support level. So we have this support level. We already tried to break out on the 15th of January. Couldn't do it. Retraced back into the range. So if we can break out and close below, I'll be looking for a pullback to the 20 MA. It's game on to look for sell positions. Let's see what the Edge Finder says. So let's take a look. Edge Finder, GBP AUD. Bearish reading still, which is nice. It's a great added confluence for me to sell. So still on the watch list, I still like it. Gold, I definitely like it. I really, really like gold. It looks bullish. Looks like a pretty nice uptrend here on the daily chart. What does the Edge Finder say? Bullish reading. What about silver? Neutral reading. Interesting. But at least gold has a bullish reading, which is all that I need. I do want to focus on gold. I think silver looks a bit overextended, a bit parabolic. But trend is up, seasonality is up. Looks like the smart money is in. Good story. I like the story with gold. And also, I have a very, very interesting article that I would recommend. So if you go to LinkedIn and you search up this guy, Alfonso Pecatiello, you look at his last post, which show all posts. This one. And he has a very interesting roadmap. So let's see if we can open the image in a new tab. Zoom in a bit. Now, this is your roadmap. This basically gives you a clear reading of what you should buy or sell in specific environments. So we are now, if you look at the upper side, we are now in the growth accelerating. So GDP is improving, especially in the United States. GDP is going up. In terms of the monetary policy, we have net easing. So most central banks are neutral or have a loose policy, which means they are net easing. So we are in this part. We are in the Goldilocks territory. And then you look at, are we in high inflation or low inflation? We are now somewhere between low inflation and high inflation. I would say we're even closer to the high inflation area because inflation is pretty much elevated. So if you go to inflation, CPI, USD, definitely above target, definitely above 2%. If you look at the yen, above 2%, above target, high inflation. So we are pretty much in the everything rally. US small caps go up, commodities go up, Bitcoin goes up. Gold has been going up steadily. Russell, which is US small caps, which I think Nick actually took a pretty good position on the Russell. So Russell has had a pretty good move higher, pretty nice bullish price action on the Russell. So that's going up as well. The DAX, which is also kind of smaller companies, going up. Bitcoin actually last week had a pretty nice move higher. Now it's retracing, unfortunately, but we don't need much to go above 100K. So we need maybe 8 to 10% move higher, which is for Bitcoin, that's nothing. And then we'll be above 100K, and then I'll consider buy setups, then I'll be bullish. So what I'm focusing on at the moment is I'm focusing on this. So US small caps, commodities such as gold, Bitcoin as well if we go back above 100K. So awesome chart. And again, if you're in any different environment, you can just see, are we decelerating? Are we accelerating in terms of the GDP? What is the monetary policy? And then how is the inflation doing? Is it high inflation or low inflation? So yeah, you can screenshot this chart or you can go to this article right here. Now, time for the giveaway. So let me copy the code. I'm going to post it in my trading view. It is a 10K one-phase DNA funded account. So I suggest you go to the DNA funded checkout page. That way you'll be able to use the code the fastest. So 3, 2, 1. This is it. So that's your code. Let me double check. Yes, that is it. If you managed to use the code, just put it in the comment section so that we know that the code has been used. Again, 10K, one phase account. Now, if you didn't use the code, but you want to get funded, you want to expand your trading capital, we have a 25% discount code, A1 Live. So A1 Live gets you 25% off any DNA funded challenge. Okay? So A1 Live, 25% off any DNA funded challenge. This is my personal 50K funded account. So past phase 1, past phase 2, funded stage at the moment, trying to get a payout, but I'm pretty close to the max drawdown. So looks like I may lose the account. Again, doesn't matter. I usually treat these accounts as expendable accounts. So if I lose one, I get another one. Again, the main point is getting as many payouts as you can before you lose the account. So these accounts are not meant for you to build a track record. The main point of these accounts is for you to actually get a payout, put the payout in your personal account and grow the personal account. That is where you build a steady track record. So minus 4.1K at the moment, a sell on the Aussie dollar, a buy on the SPX. First trade is in a loss. Second trade is break even. And by the way, this challenge is purely traded by ChatGPT. So every single day I go to ChatGPT, I take a trade signal, buy or sell on a major currency pair and the S&P, and then I just execute it in my DNA funded account. So far, ChatGPT has been doing well past phase 1, past phase 2, but the funded stage seems to be not working so well. And again, the performance of ChatGPT, as far as I found, is pretty dependent on the performance of the S&P. So if the S&P is steadily going higher, ChatGPT will keep on making steady profits. So yeah, A1 Live, 25% off. Hopefully someone used the code. Let's take a look at the comment section. So let me see if the code has been used. Aizen got the code or got the free challenge. Congratulations. Awesome. I have more codes. So every single day I'm live streaming on the Trader Nick channel, and I give away one DNA funded account. So I do have more codes. Make sure you guys join in the future. And I usually do the giveaway somewhere around the middle of the stream. So 10 or 15 minutes into the stream, the giveaway usually happens. Now, things I also wanted to cover. So silver, I don't want to touch it. I don't want to sell it because we're definitely in a risk-off environment, but I don't want to buy either. I think this is very crazy to be a buyer at the moment. This has gone parabolic and it just looks like Bitcoin. I much prefer gold. So I love gold. I think gold is a good play. Around the 20 MA, I'm looking for a bit of a pullback. I don't really want to buy the all-time highs, but if we pull back for a little bit, touch the 20 MA, that would be perfect. So I usually like to execute my setups around that 20 MA. That's kind of the sweet spot for me. And again, I do like this previous all-time high level as well, which acts as a good support level. I'm bullish on gold in 2026, so I would say this is one of my favorite things to look at the moment. So stock market, I kind of covered. I don't really want to touch the stock market before we get all-time highs on the NAS or before this flat range clears up a bit. If we do crash, if the tariffs, if Trump goes into full tariff mode, which I don't think is going to happen, I think Trump learned in 2025 that putting on crazy tariffs, you're going to make the stock market suffer. So I don't think he's going to do it. But if he does it, we're going to get a crash, and I'm going to take all of my cash and I'm going to go into stocks. So I'm going to buy the dip, basically. That's my game plan as far as the stock market goes for the long term. But I don't think it's going to happen. I'm also looking for short-term plays, but not at this price. Not at the moment, because I think it's flat corrective range bound. So that's for the indices. DAX, I actually like this level, if you would believe that. I know I took 2 losses on the DAX in the last year, but because of the breakout and because I'm expecting smaller companies, US small caps, smaller European companies to do well in 2026, I don't mind buying the DAX. Now, something I would love to have is I would love to have the edge finder confirmation. So I would love to get a bullish reading on the DAX. Right now it's neutral, so that's a problem. If we get a bullish reading on the DAX, this is a good level, so I don't mind the level, but that's about it. So if we get a bullish reading on the DAX, I'll most likely take an attempt to go long on the DAX. As far as the Nikkei goes, Nikkei all-time highs looks pretty bullish. The current PM of Japan, she is very dovish. She's all about spending, all about basically pushing the stock market higher, or it leads to pushing the stock market higher, but it also creates some problems for the Japanese bond market. So let's see. If you type in JP 30-year, I think this thing just keeps on flying higher. Yeah. So people seem to be losing faith in Japan and selling the long end of the bond market, which this has been a massive train higher. So if you can execute a position betting on or buying the yield, the 30-year yield, it's a pretty good play. But this thing just looks super bullish. So the investors have noticed the BOJ doesn't really care about the situation with inflation. The new PM, very dovish. This is what happens, and also it leads to the Nikkei going higher. Now, what's the Nikkei, or how's the Nikkei doing on the edge finder? Let's take a look. Nikkei, I think that's how you spell it. Yeah, bullish reading. That's actually nice. That's actually pretty nice. So if we go maybe back to this support level, that is not a bad play to have. Of course, we have the BOJ meeting, so we need to see what happens with that. But Nikkei, I kind of like it, actually. I'm going to have to see on which accounts I can execute a Nikkei long. I think I can do it on my DarwinX. I think I can do it on some prop firms, and maybe on my IC Markets account. Not sure. That's the problem with having like 5 or 6 accounts, because some prop firms, some brokers won't allow buying, let's say, the Nikkei, or don't have the instrument. So gonna have to do some research into that. So let's see the comments. Euro dollar. I think the euro dollar is pretty interesting. So a position that I noticed Ivan has in the markets is, I think he bought the euro dollar betting on this drama to continue, betting on some more dollar weakness and euro strength because of the upcoming tariffs, which is a pretty good play. I think it's a pretty good edge. So for the euro dollar, we could see some appreciation possibly. Edge finder, neutral. Although personally, if I would execute such a position, well, no, I wouldn't go into GBP/USD, because I wouldn't buy GBP/USD because GBP is super weak, while the euro may actually be do well. Aussie dollar. If the drama continues, Aussie dollar could continue going higher. Again, we have a pretty bullish candle on the daily at the moment. But I would rather wait for a taco trade. So I would rather place a bet on a taco position where there's a mean reversion. So the last time we got a taco trade, I think it was on the NAS, where there was an opportunity on the NASDAQ. Let me try to this one. This was it. So this was a massive sell-off. Look at the size of this candle. And that just goes to show that the markets may have started to ignore Trump's threats. We also get a ruling this week, or we should get it this week, I believe, ruling around the legality of tariffs. So are tariffs legal? Can Trump actually implement tariffs? We're going to get a ruling on that. But compare the last taco trade, the last taco opportunity to the latest one. The market definitely reacted almost twice or maybe 3 times less. Or if we look at the size in points, this was 4.4%. This currently is 1.5%. So looks like the markets have started to ignore what Trump is saying. That's at least what it seems like to me. Now that creates less of an opportunity for us, because if you had a massive red candle as you got on the 10th of October and you just bought, that was a good taco position and there was a lot of profit to squeeze out. But buying here and going back to I don't know, the top of the range, there's not quite that much of percentage to squeeze out. Okay, so let's see, what else do we have? Hello Sluggy, hello Ballout, hello YouTube is live, Cycling Club welcome, Joshua welcome. Let's see, raining tacos, GBUSD to 1.265, UJ to 160. UJ, not sure. So as I mentioned, I thought, or the game plan was at least for UJ to keep on pushing into the level with speed, with force, and then I would possibly take advantage of an intervention. That didn't happen just yet. So the whole trade idea got messed up with Trump, with the risk off, with the drama. Not so good to see, but it is what it is. There's going to be more opportunities later. Forex sucks these last few months. The volatility has definitely been pretty low. So if you go to the DXY, if you go on the daily, we've been stuck in a range. And if there's no narrative on the dollar, if the dollar is not really moving up or down, if it's staying flat like this, you're not going to get a lot of opportunities in Forex. Now with the yen, it's a bit of a different story. The yen has had a bit of a reaction, but the dollar usually leads when it comes to opportunities and volatility. I like the yen long story, but we will see. I don't know. We should get a bit more clarity from the BOJ, but if the BOJ doesn't commit, if the BOJ won't commit to higher rates, to actually increasing the interest rate, because it's still negative. So if you go to a great new tool on the Edge Finder, if you go to, let me just try to remember, where do we have that? Here. So real yield heat map. And what can you see here? What is the real yield in Japan? It's still very much negative. So they still don't want anyone to keep their money in Japan. So unless the BOJ can actually commit and raise the rate to I don't know, 1.75, 2%, maybe even higher, the real yield will remain negative, and the story that is currently happening will keep on happening. So the yen will keep on losing strength. The Nikkei is going to keep on going higher, while the long end of Japanese bonds, the yield is going to go up as well. But they could change their mind. They could go and aggressively raise the rate. So if we type in BOJ interest rate, I usually look at trading economics. This is it. So they have started to push it higher from negative rates to now 0.75, but it needs to go up more. It needs to go up more. The real yield is still negative. So by the way, the real yield is what actually matters. The real yield is the interest rate minus the inflation. So 0.75 minus 2.9, you get minus 2.15. But if they raise the the interest rate, then you may get kind of zero real yield, maybe even a bit positive. We're going to see. So let's take a look. Japanese 30-year yield ain't going higher than 5%. Well, we do still have quite some room until 5%, but you never know. The markets can always surprise you. NAS 100 collapses to 224. Okay. Marco, you had showed an indicator which showed recent highs and lows. What strategy did you use with this? So that was my old strategy, which I no longer trade. It was purely based on technical analysis. But essentially, the indicator that I used was to identify the highs and lows, just a visual aid, nothing super fancy. It's the GT recent high-low. I no longer use it because on the daily chart, it doesn't really make sense to use it. So for the final trade request, or actually final thing I want to check out, USD CHF, which is interesting in my opinion. I know Alan is in this. So Alan bought the lows, collected positive swaps as well, which is always nice. Positive swaps, everyone loves positive swaps. So actually, where do we have the... okay, I'm no longer sure where we can get the swap data, but I'm gonna find it because things have changed in the Edge Finder. The organization is a bit different, but USD Swiss, buying it, you get positive swaps. If we go back to the support level, I think it's a pretty good play to buy. So I have an alert set, just getting in on a buy setup. This is a pretty heavy level of support. The Swiss central bank probably doesn't want to see USD Swiss go below this level because that makes Swiss exports a lot more expensive. So just buying the low of the range, selling the top, I think it's a pretty good play. So this is one of the things I'm watching alongside with Alan, and I'm sure we're going to comment about it, I think tomorrow. So tomorrow we should be on together. If you go to the A1 live stream schedule, you can see Alan and Marco. So tomorrow we have a joint segment together, and on Friday as well. Friday we have a joint segment as well. And on each of these segments, I'll be giving away a free DNA funded challenge. So make sure you guys join. That's about it. Thank you very much for watching. Good luck in the markets. Let's see what happens with Trump and the tariffs. And that's about it. For any new trade ideas, you will get updates in the A1 Trading Discord. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.